Okay, welcome everybody to the Pipnotic Symposium on the 27th of March 2017. This is the first live symposium since I returned back from a holiday, which I did on Friday here a couple of days ago. And it's really good to be back. We really enjoyed our trip in Bali. There's so much to see, such an incredible environment, lovely people. So we had simply a tremendous time. I'll show you a quick picture that really stays with me. When I was standing, this is on the southern tip of Bali. So standing here, if you look over diagonally over to the right, then you can see an area called Canggu. This is kind of in the evening, the sun's going down, standing just here and just watching this huge sea, the Indian Ocean out in front of you. It's absolutely phenomenal. So it makes you feel really small and insignificant. But it was beautiful, such a beautiful trip. But now I'm back, which is great. So I look forward to doing some trading. I haven't really been doing a lot of trading or anything else, not even programming. Been hanging with my family the vast majority of the time, which has been good. Very good. Okay. As some of you may have realized, I've made some updates to the software. So I'm going to run through the updates quickly and show you what they do and what we can use them for, and then afterwards we'll run through a few pairs. And if you have some instruments that you want to have a look at, just type them in, and I'll get to those when we're finished here, providing that my platform, has those. Hi Ryan, thanks for joining. Okay, so you can see we have these X's here and these checkboxes up here. Let me go to a smaller time frame. So you have our checkboxes here, or these checks here, and we have the X's here. And this is a small modification to the software. And this is a version that I have not yet published, but it's pretty much the same as the one that you're all using. But it's these checks and X's are related to this section just here, so the supply and demand section. And so the two additions that I've added, they are show compact supply and demand, and this is currently set to true. If I just set this to false, then we'll see the old configuration where it looks like that, where we have these levels. So we have overlapping areas of weekly demand and a monthly down here at the bottom. So we have the lines. We have supply up here at the top, and so this just shows you pretty clearly where these areas are. But sometimes, as you may experience, if you want to draw in rectangles like so, you can see that the charts get pretty cluttered. And so what I've done is I've added a small modification to the software that enables you to enable compact supply and demand levels. So if you set this to true, then the lines will disappear, and you'll then be shown these check marks. So you can see here, instead of having a line, you have a purple and an orange check mark, and these tell us that we have monthly and weekly demand here at the bottom. So instead of having a line, you have this check mark. So you have to do a little bit of you have to do the legwork yourself because you don't exactly know where the area is, but that's fine. I just put this one in like that. So that's what it looks like. And so here we have the weekly, and on the monthly, if we have a look here, you can see that it's right here. This is the monthly one, which we can see here that it's telling us about. So something like that. So rightfully so, we have, there's a bit of a bug there, it didn't update. No. It's showing us the weekly area and the monthly area, which it should, so that's super. I have to fix that bug there. Good, so that was that. And then I have another option that I've added, which is a nice one, and that corresponds to these X's that you can see here. You can see here we have check marks, and here we have X's. And what the check marks show us, they are demand and supply that are still valid. They have not been violated. And so the X's show us the opposite. They show us areas of supply and demand that have been violated. So if we consider for a moment this one here, this area here, it's just been tested once, and on the second time, price tore through it and didn't look back. And so what does that tell us? Well, that tells us that we have to identify the area of demand down here that consume this. So ideally, we'd be moving this box, the rectangle down here somewhere. That's a bit of a wide area, so we'll go to a smaller time frame. And you can see that you can kind of refine it a little bit. We'll get something maybe like that. And then on this time frame, you can actually see that it's a response to this here. So here's the real level, this 9600 area. And so it just enables us to identify these areas of supply and demand that have been consumed, and in turn, the areas of supply and demand that consumed them. And so we have this one at the bottom, which is fine. All of these have been taken out by which one? By this one down here. So it's just a really nice way to be able to spot these visually without having to do too much legwork. Okay, so that was that. Pretty straightforward. A quick update. I've contracted a guy that I know to develop this software, or convert this software to a platform that'll run in the browser. So, I mean, all of you are using MT4, but I'm hoping within the next 3 months, I think I said this about 2 months ago, but in the next 3 months, I'll have a version that'll run in the browser. So it'll look similar to Pro Realtime or some of the other online trading tools, but it'll focus on supply and demand and currency strength. So this is something that's in the books, and it'll run on anything. So you can run it on your iPad, on your Microsoft Surface, on your laptop, on whatever you like. This is something I had a meeting this morning about that, so I just started that project today, which is really exciting. So I look forward to that materializing. Good. Okay. Well, that was a couple of comments on the update. I have just updated the video that explains these new features, and I'll put that in the member section very soon. But for the time being, I'll copy the link. The link to it is, let me get the link. Okay, so the link to it is here. There we are. So that's a little bit more information regarding the configuration options for the new version of the indicator. So what we're saying, so is it standalone or does it need a Pro Realtime? It's standalone. So I'm getting someone to, I simply don't have time to port it, so I'm having an old colleague of mine write it. And so it's written in JavaScript, 100% JavaScript. So there's server-side JavaScript and client-side JavaScript, and it's based on Chrome's, Google Chrome's a V8 engine. So it'll be super duper fast, and it'll be hopefully very, very nice. But yeah, so I'm hoping that I'll have a version ready in 3 months, and it's my ambition to offer both solutions. One for if people want to keep using MT4, that's fine. But if people want to maybe try something else, and they're welcome to try this new version. But again, that's still some months out in the future. But I'll keep you all posted on that. Okay, good. Well, if we have a quick look at the dollar, what's going on here? You can see currently that we have this area of fresh supply. The base of the supply is up here, so the 106.15 area, and price has not tested it yet, but it has tested the lows here. So this is what we're currently reacting on. And so for the time being, I think that we're probably going to see a little bit of selling until price manages to rebalance down in here. So knowing that, if you want to be short the American dollar, then this is of course going to affect all of the other currencies that are paired with the American dollar. We have a quick look on the smaller time frame. You can see here that we have this nice area of demand down here at the 95.85, and this is not demand. This is simply a reaction to demand, which is here. And so price rallied, we moved away, we had strong demand, price tested this level, and then this is what drove price higher into this area. So I think if price manages to come back down here, we'll probably see some reactions again down there at the lows. And you can see if we remove this and we have a look here, you can see that price has been kind of feeding into this little price structure here. If we go to a smaller time frame and have a closer look at it, we can see that it is, let me mark these off and scroll back. We can see that, yeah, we're reacting to this just here. So we have the area just here. Price tested it, and now we've had a few tests of that area afterwards. This is on the release, and this is the later one here. Super nice test, and then price went north like a freight train and didn't look back. So that's a really interesting area. So I think if price manages to get back there, it might be worth having another look at. But if you look a little bit lower, you can see that we have this area here, which is maybe clearer on a different time frame. Here we have this. We have this little accumulation candle here, and just below that we have this one here. So I think we'll probably see some reactions at around here. We'll just mark off the whole area like that. So we go down here, you can see what it looks like. It looks like this, just here. So price managed to rally, accumulate for a bit, and then rally higher. So I think if price gets down there, we'll probably see some movement. But for the time being, selling the dollar because we're reacting on this monthly supply here at the top. We have not gotten deep enough into the area. If price comes up to here, then I'll be more inclined to sell the dollar because of the reaction on this really nice fresh area of supply. But for the time being, we are reacting, and so price will probably move back down into here to this base, which starts just around here. You can see the highs of the bodies along here, and so price will probably move back down to there or gravitate towards that area unless something radical happens in the US, and these days anything can happen because of what's going on with like with the policy. But the Fed was looking to hike interest rates. They did, but they didn't do it as aggressively as possible, which was negative for the American dollar. It's kind of counterintuitive for the because you would expect interest rate hikes to attract flows, but this is not what happened. It was less of an interest rate hike than expected, and so this is why the American dollar sold off. So as I mentioned, for the time being, things are moving lower. So selling the American dollar, I had an order to buy at this level here, and I was stopped out just here. So when I was gone, it got filled just when I was about to get on the airplane to fly back from Bali. So I couldn't manage this, which was a bit of a blow, but it's funny, price came down to this area. We had a bit of a feed into it, and then a small rejection, and then price came back down here. And I put this trade on in the coach's corner. And what I failed to realize is you can see that this is actually a child, and the parent is down in here somewhere, and the child is reacting to a 1 hour area of demand, which is down here. And you can see actually very clearly on the daily chart, but I overlooked that during my analysis. You can see how price rallied, we accumulated, we poked back into the area. What does that tell us? Well, that tells us that you don't want to pay a price any more expensive than the 110.33. This is where price is currently sitting at. So this is the low of this candle, roughly 110.30. Excuse me, and I'm expecting price to maybe react, but you can see how price is really pushing lower, as you could see on the dollar index. So I expect the dollar index to move lower. What I do like is this one down here. This is very nice, buying at around the 107-ish area. I like that very much. This is just a very nice pattern, how price rallied, accumulated, and then rallied. And the area, the bar to the left, the green bar, we have not managed to kind of feed back into the area. So I think if price managed to come back to this area, it'll justify a decent long position. You can also see here, this is the high of November 2016, which lines up nicely with some of this here. So we have resistance becomes potentially support. So this is kind of like the flip zone for this. So that might be a quite interesting one there on the American dollar. We also have, for selling, this up here. So we have a low, a high, a low, high. You can see here that we have the check mark, which tells us that we have supply currently driving. We're reacting on this supply up here at the top. Then price is selling off. And if you have a look on the monthly chart, you can see that we are reacting. Oops, come on charts. We're reacting on this area of a weekly supply. So we've tested it. We've had a really strong move away from it. We had a bit of a retracement to rebalance this price inefficiency, and our price is selling off lower, and now we're standing on this small hourly demand. So I'm thinking if price manages to move back up to this area here, so the 11400 area to the 11550, I think that this would be a decent area to sell. So just watch if price does manage to wriggle back up here. We'll remove this 4-hour area. Just focus on price reaching this area here and seeing how it reacts. But I like this area here, the 11400-ish area. So if price gets back up there, keep your eye on the news, see what's going on, and then have a look at maybe selling somewhere in here, around there. So that looks like a pretty decent area. Come on. All these objects there. Good. So we have that, and then what else do we have? We have on the pound, I still have this order in, so selling at the 129.46. So this is a really nice one because you can see that we had Brexit here, so Brexit, accumulation, then the bottom fell out, and then it went down very, very far. So currently we're having the British pound moving higher. This is due to two things. Number one, the negative American dollar reacting on supply, but the fundamentals are currently driving the American dollar lower, and this is again due to the conservative interest rate hikes, but also the British pound. The Bank of England was talking about hiking interest rates in 2018, so this is good for the pound despite the Brexit. But looming just around the corner, we have the implementation of the Chapter 50 in the UK, which could kind of do anything. So just be really careful when that happens. I think that is the end of this month sometime. So keep your eye on the news for that, and I'd say pull everything and wait and see what happens. So I might readjust. It's very far away from price at the moment, but I'm definitely going to be trading at monthly and weekly extremes, and I'll stay off the daily and lower time frames simply because such enormous volatility can really drive price anywhere. So I have a short up there, have another interest in selling the pound if it gets back up here. I like that one, the 132.60, 62 area. We have two levels there. On the euro yen, we have this area here, which has been tested once on the release. This is the 126.26 area. I really like that. That's a pretty decent area just here. Ideally, you don't want to sell for a price any cheaper than the high of this. So if we move that, so you don't want to sell for any cheaper than about the 126.50 would be a decent area to sell. I might take a stab at that, but this has been tested once. Right here, this one here is still untested, so I like this one better. But again, that's pretty far away from price, so we'll have to wait and see what happens there. Okay, then we have the Aussie. This is really nice. This is certainly it'd be certainly interesting to sell the Australian dollar, Japanese yen at the moment, and this is because we're reacting to this this monthly supply here. So you can see we're having a really strong reaction up here. This is good because now you want to position yourself short. So you want to go to the smaller time frames, the weekly and the daily, and look for areas to get in at those levels. And you can see we had a nice reaction. The price rallied, we accumulated, and then we sold off. So we have a clear imbalance in supply and demand at roughly the 86.50-ish area. If you go to the daily chart, it becomes very clear, and you can see it just here. So if we remove all of these and draw them in again, let me get these out. You can see that we have it right there. So we have a horizontal trend line break. The trend line is here, just around here. You can see we had price sitting on the level, and then it cut below. The area it did it was this one just here. So we have the parent, sorry, the child and the parent here. But if you look a little bit higher, we have this one here as well. So we have a couple of interesting areas. This one is interesting. It's been tested once, twice, but the current imbalance that is closest to price is this one here. And there's no demand until down here. So price will probably move through all of this stuff here pretty easily. So if let's have a look at this here. Price has tested this once, twice. This is the third test. I think if price comes up here and we manage to position ourselves short, then price will probably have an easier time moving through this demand, and then there's free sailing until around down here. If you looked at this, you might think, well, actually we have demand here and demand here, so like the parent-child relationship, and this is not entirely the case. And this is not the case because this is actually the filling of orders. This is the demand, and this is simply a price returning to limit orders, which are located down in this pocket of liquidity, which is down here. So this area of demand is actually the 8110 area, just north of the 8100 area, and this is what is currently holding price. So if you manage to get in somewhere up here, you want to make sure that you're out by the time price gets to the just north of the 8100 area, because we're definitely going to see some support for price at that area. Let's have a look at something else. Is there anything else that any of you are interested in looking at or have any questions about? Anything, the software or pairs? Let's have a quick look. I'm just going to have a look at the orders that I have in. So we have got a couple in. Got this one here. And this is the Aussie Yen, which is at the top of that fresh area that's still to be tested. We have this one here, which is the Euro Yen, which is another one just up here. And I have this one here. This is the dollar yen that we just spoke about, which is that nice area of, I think that's daily demand, right there, nice and fresh. And then we have, what's this? Here, this is the Australian dollar, American dollar, and I like this one because this is just a nice reaction. I mean, price has been back to this area, to the high. So it's been back to the 8160-ish area, and so entries want to be at that area or more expensive. So you don't want to sell for a price any cheaper than the 8160 area on the weekly chart. So just keep that in mind. I put my area just above it, like conservative, just a little bit higher than that. So we'll have to see what happens when price does get up there. If we have a look here on the weekly, here we have the pound trade, which I really like. It's just simply because of the way price cut away, but we'll have to wait and see how price forms below this area of supply. This is a really sharp imbalance. Price left, and now price is returning. So we'll have to see. You can see now that we're starting to form some areas of demand just below. We have some fresh areas down below here that we could present some challenges. We have this one here. The price is reacting on. We have maybe something right here. So we'll have to be a little bit careful. If we do get in here and price gets back down to these areas, and you might want to be a little bit careful. Yeah, and then we have this and this, but that's really far away from price for the time being. Okay, what else we have? The Euro Kiwi. On the weekly, you can see it again, really nice one. I really like that. We have this nice sell-off, accumulation sell-off. Price came back to the area roughly. And this area took out this one. So this is the one with the meat and potatoes behind it, and price moved very quickly. Now price is rallying, we're accumulating, maybe a rally up into this area and a reaction of some kind. So that might be a pretty decent area. Takuji is saying the Euro Australian dollar. Let's have a look. Right, go on the monthly and have a look. We can see that we're reacting to something down here. So we want to find out what that is. So there must be demand down here. So if we go to, let's say, the daily chart, and we scroll over, maybe we can find something. Here we have something. Those look pretty funky, those candles there. So we have this here. We have this area here, kind of the whole area in there, which is just below price. That's at the 135.53. But on this time frame, I wouldn't want to go there because you can see how the price kind of poked pretty far down. So let's have a look. We're down here. So I think maybe something in here, maybe something in there. Let's say this is where we have the area. Good, right there. So the 133.70-ish area. Our price is moving higher, so we're reacting on here. This is maybe an hourly demand in here that's holding price, but you can see how price has tested it many times in the past. We had 1, 2, 3, 4 tests, and then price is moving north. And so we're rallying. We've accumulated a little bit. Now we're rallying higher. So what we could do is we could position ourselves short when price managed to reach this area of supply just up here. There's a really nice clear imbalance there, so let's just mark that one off. So from here to here, I'm just going to explain this quickly. I normally mark off the area of accumulation, so this one here, which you can see looks like that, and then I look at the candle to the right, the one that left, so the one where the body of the candle closed lower than the low of the accumulation. And it was this one here, and you can see how the high of this candle went up to there. And so ideally, you don't want to sell for a price any cheaper than the 145.68. And why is that? Well, let's have a look on the smaller time frame and assess and see why. You can see again on the daily chart, it's even clearer, where we have the accumulation candle, which now looks like this. And we have the green candle to the left just afterwards, and it fed back into this accumulation later on. So we have to go to another smaller time frame. We'll have a look, and you can see it here. This is pretty clear. You can see we had actually had a gap slip down. So we had price spiked up into the area. So there's probably something up here. We'll have a look at that in a second that we want to look at. And then price moved back up into here, and then it sold off. So this is actually just closing the gap. You can see it kind of went to the lows of these wicks here, then price sold off. So if we have a quick look and see what price is reacting on, so it's reacting on something here. This is really messy because of all these huge wicks and spikes. They really destroy an aesthetically pleasing chart. This is not one because of these wicks. I don't like these. Sometimes I even ignore these huge wicks because they are just liquidity void. There's no volume in big spikes like this. But if we look at this one here, you can see that price did get back up to here. So ideally, you don't want to sell for a price any cheaper than the 145.70. So it's something like that. Something like that. Oops. I'd say. But due to the fact that we have a very small, so a very large wick, I go to the hourly and find out what's going on in that wick. And let's see if we can do that. We'll scroll back a little. Okay, here. You can see it here. You can see that there's a big pin bar, and then price came up and then went down. So it's difficult. This is just a liquidity void, but price has been there, so the stock wants to go above there, and I think you'd be fine if your entry was around there. Oops, come on. Was somewhere around here like that. Like that. I think that would be fine. But you could, price has been back to here, so this could be an even more conservative entry at the 146.60 area, and you'll stop over the top. But I think for the time being that this one is okay. This is like the weekly area. It's very clear on the weekly chart. So doing it like you can see there. So you have the accumulation, you have this candle came back to here. So just do it like that. And the stop just above there. And you're probably going to get a reaction here as well. So this one on the left. So we go to a smaller time frame on the daily chart and have a look. You can see that we have price reacting on these lows here. So that might be worth having another go at the highs. But then we're getting pretty close to this base here, so we could just be patient and wait for price to come back up here, because this is not really supply. This is kind of a reaction to the liquidity available for sale just up this area, just up here. You can see how price left, tested, and then it moved away. So this is not supply. The supply starts at the low here and it goes up to here. So there's like a thicket of liquidity here, which is currently holding price. So the euro is gradually drifting higher. We go to the smaller time frames. You can see that below price, we do have some fresh areas. We have this one here. We have this one here. This is a reaction to this, so something like that. So we have those 140.88, and that's currently below price. So I think something around there. And then we have this one here, which is not really, it's not like a nice area. This isn't a nice area, actually. This is the only nice one here, so I'll actually remove that. I like this one the best down here. You can see the prices kind of testing these lows here, which is a reaction to this demand here. And this is pretty thinned out. You can see we've had three really good tests at that level, so price will likely start to move lower if it does come down there. Yes. Okay, let's have a look at the dollar franc. I don't trade this much anymore, but we'll have a look at it anyway. Well, it's not going anywhere. It's just zigzagging. This is a monthly chart. It looks like it's just moving sideways. But even though that's the case, you can see we have this area of demand down here, monthly demand. Go from the low to the low of the candle at left. I gotta fix that bug. And this is where price poked into when this happened. Price stabbed into there, and then it went back up. So it's incredible how these areas hold. It's a huge stop, 630 pips, but it really was capable of holding price, supporting price down there. And their price has just been drifting. And if we look higher, we have some areas up here. We have this one here. See, all of these are gone, so you don't want to trade anything up here. You want to wait for price to come higher. And this is a big one, so we go to the smaller time frame, then we can refine it. You can see on this time frame it becomes a little bit clearer. We have the high, and we have the release, which is just around here. So this is a much clearer picture on this time frame. We zoom out, you can see what it's reacting to. It's actually reacting to this in here. So we have this here, like that. So this is actually not supply. So this is the supply. We had two tests. Now price is slowly returning. Maybe if it gets back up there, it's not really doing a whole lot. So that's what price is currently doing there. And on the monthly chart, you can see that, remove that, you can actually see that we have this is the boss. So we'll move back into here. No, it won't do that. So you can see the price fed into it. A little bit further, we have this one a little bit higher, the more conservative one. And then price managed to test this child before it released, and it really went south there. So for the time being, I'd say leave this pair. It's not really doing anything. We'll close that one. Let's have a look at some strength information. Let it update. It'll be pretty exciting to get the new software going. I look very much forward to that. That'll be brilliant, absolutely brilliant. Okay, so we have this long. You can see that the pound is starting to pick up. This is the monthly, weekly, daily, 4 hour, 1 hour, and a half an hour. Japanese yen is also pretty strong, and we have the American dollar, which is weaker than the Japanese yen, and this is where the trade kind of broke this area here. You can see how we just had an enormous imbalance there between the American dollar and the Japanese yen. So that's why it cut through there. But for the time being, it's pretty scattered. Let's maybe try a smaller time frame. We'll do swing trading. Now we'll do the day trading. See what's happening intraday. Okay, so we have here the pound still looking strong, and the CAD. So the pound, if you pair the pound CAD, let's have a look. The pound CAD, this should be moving higher, and it is. Nice. So we have to find out what we're doing on the big picture. Yeah, so we're reacting to this area of this price imbalance, which originates from here. We tested it, so we have a good reason to move north. So there's a lot of demand down here. You can see that we had this whole box, this whole box of accumulation here. So many months of accumulation just down here. Now price is reacting to that, and now that was sufficient to support price and move higher. So what's going on? Okay, so the price is reacting there. If we have a quick look on the smaller time frame, you can see that price is indeed starting to move north. There's no clear areas here. You can see that there was resistance up here, which kind of on the bottom, resistance, support, resistance at the 17500 area. So price is certainly moving high, you can see. So we want to be on the hour and 4 hour and find areas to get in here. And providing there's no supply, oh, we had something there. We've got this here. We have this, which is untested. And we also have the highs here, some resistance. But this is pretty far from price, I think. Not really, the 16900 area, so that might be maybe an interesting area to sell, but it will be going against the strength information. But I think if price manages to come back to like here, maybe find an entry on the 1 hour chart, it might be worth having a go at. You've got to keep around the news when you're on the smaller time frame. So it brings us to this, which is a really extended area of accumulation. So on the smaller time frame, it doesn't look very pretty at all. But we do have this down here, which looks a bit better. The 165.60 area looks okay. We'll probably get a reaction in there. Yeah, but not really a pair that I trade a whole lot. But that's what we're looking at there. If we have a look at another one, what else do we have? We have the Aussie, like longer term, the Aussie Japanese Yen, so selling the Aussie Yen. Yeah, well, that confirms what we just spoke about earlier on, where we have this monthly supply, prices reacting at it. So maybe, yeah, shorts just up in here if price manages to get back to the 86.60 area. So you can keep your eye on that. What else? Does anyone else want to look at anything else? Otherwise, I want to talk a little bit about wrong presentation. I just want to have a quick look about the accumulation. Again, this is a topic I talk a lot about. Let me find this slide here. Yes. Okay. Okay, so we have a few new guys in here, so I just want to have a quick talk about spotting the imbalances in supply and demand. So spotting an imbalance in supply and demand is pretty easy. I mean, here we have some candles. I've left out the wicks, but I mean, price rallies. I'll put this up. So price rallies. It stops like very suddenly, then we have major retracement and a move away from an area. So it looks like that. So we have an area of supply just up in here, which is very clear. And you see this all the time on a price chart. If we look at a continuation pattern, we have price sells off very quickly, price stops, again, nice and sudden, like we saw over here. We accumulate for a short period, and we have extended selling. So for continuation pattern, we have something like this. So this is going to be a top, If you turn this upside down, it's going to be a bottom, and this is going to be a pattern that is going to take place between these tops and these bottoms. So you would sell here and you would sell up here, and the opposite for a move higher. So, I mean, defining, locating, and qualifying a price imbalance, you have to ask yourself a few questions, and we've spoken about this in the past. But you have to ask yourself, most importantly, how strongly did price depart from an area of accumulation? And you can see this very clearly on the price chart. If we go back to a price chart, you can see that price left this area very aggressively. You can see how we had accumulation, then we had this big candle. This is a week of trading, and we even gapped down. We opened below the close of this candle. That means that we have a huge interest in keeping price below this area. So that's a nice, clear price imbalance there. You also want to look at the structure of these price imbalances, because this tells us a lot about if we have micro supply and demand and parents and children within like a macro area of accumulation. And this is quite important. But most importantly, you want to look for, or also not most importantly, but also an important point is you want to look at the length of period of accumulation. So do we have price accumulating for an extended period of time? Did price accumulate here for a long period of time? Not really. It accumulated for 3 periods, and then price started to break down. So this is fine. But what you don't want to see is, you don't want to see stuff like this, because this is really, this is not good. This tells us there's agreement in supply and demand. This tells us that there's disagreement. So you want to see disagreements, not agreements. These are the things that we want to train our eye to be able to see. Then we have the concept of parents and children. And the reason I use the term parents and children is because it tells us there is a relationship. You have parents and children are related to one another, so supply and demand, parents and children, supply and demand, they're also related to one another. And so it helps us differentiate between fresh supply and demand and reactions to them. And we saw earlier on, I'll go back to the chart, how we had this. This is a really good example. So we have this price structure, we have this demand, price established this area, then it moved away, then price tested, and then moved higher. Is this demand? No, it isn't. This is a reaction to this demand. This is the child, and this is the parent. Is this demand? No, it isn't. It's a reaction to this demand here. And the same applies for this one here. And so the area of demand is down here. It starts at about the 13900 area, and it goes down about 40 pips or so. Here we have another one. This is a parent. We don't have any children yet, but the child will be a reaction to this one just here. And so it trains, again, it trains our eye, and it helps us differentiate between real supply and demand and reactions to them. Cool. And I have these questions that I like to ask myself. So I identify an area, and then I ask myself the question, has price been back to the area first? If it has, then this is good, then it's a nice fresh parent. But if it has not, then it's a child. And if this is the case, then you have to be a little bit careful. Then you have to reassess what's going on. And so you go to section 2. How did price react the last time it reacted to the area? Did we get a big reaction? If we had a big reaction, then it's good. If we had a small one, then we have to leave it alone. Now, let's have a look at a big reaction. This is a pretty big reaction. When price came down here, price managed to move above the previous high and a bunch of other highs here. So this is a good reaction. The second time it did it, price had a less than big move away. It left when we had a test, then price moved, but we didn't have any green candles away from the area. The third time price left, and we had actually a tremendous move away from the area. And so this qualifies this area as a good area of demand. Would you trade this? No, you wouldn't, not anymore, because price has already been tested 3 times. So this pocket of liquidity has been thinned out, and the other areas that you might want to consider are going to be located a little bit further below, down here, for example. You could test this. You could take this one here because this is apparent and it's still untested. But this, if you manage to take this and price test there, you get the risk out, whatever. When price comes back down to the area, then you'll have to reassess how price reacted once it fed into the area of demand the first time. Then you kind of do, then the same applies to this one as applies to this one. And when this one starts to see 2 and 3 tests, then you're not going to take it. Then you're going to wait for price to come back down here or down. Okay. So if we have a quick look here, these are some trades that I've documented and have been sent in, and this is a really good example of a child and a parent. So we have the area of parent demand is down here, price left. It tested roughly the area, the highs of this accumulation candle, and it went away. And so this person put an order in to buy here. And then you ask yourself the question, I mean, is this demand? And you say, no, it is not demand. It is a child, which tells us this is a reaction to demand, the demand being down here. So you want to buy down here. You don't want to buy up here at the top of the body of this period of accumulation. Okay, then we have another one here where we have this area of supply that's established, price leaves, we accumulate for a long period of time. So if we go back up to here, the length of period of accumulation, is there agreement or not? Is there agreement here? There really is. There's a lot of agreement, and we don't like that. We want to make sure there's a disagreement in supply and demand. So this is not a good area to sell. This person sold here. What happened? Price just cut through it like it wasn't even there. So we had accumulation. We had a really nice green candle that pushed higher, and then price managed to move and eat away and come up to the area of supply that is the actual supply. This is a mere reaction to this small continuation pattern located just below this parent. Okay, and then we have the parent. Then we have this one just below, and this is not a parent, sorry, this is not a child, this is just an extended period of accumulation. This person sold here, or they tried to, and they got stopped out in very short order. Why? Because this is not supply. This is a price imbalance, but it's not supply. Well, it is supply, but it's very poor quality supply because we have so much of an agreement in supply and demand. So this is not a very decent area that you want to be selling at. Price went back to the parent, the fresh area. When price left, you see there's this black space here. Price has not been back since there. We had a reaction, and this was enough for price to be capped, and which forced it to move lower. Yeah. Okay, and then you want to ask yourself a question, which is what is currently driving price? And so in order to be able to answer this question, you have to be able to start your analysis, or rather you should start your analysis from the higher time frames. And there was a really good example on the Aussie dollar here. And so if you're on the hourly chart, you think, oh, should I be buying or should I be selling? And so you look and you say, well, price is moving down, but it's starting to turn around, so maybe I should buy. Maybe you should, but how do you know for sure? Well, then you go to the bigger time frames and you say, okay, what should I be doing? Then you can answer this question very quickly. Wow, we are reacting at whopping monthly supply. What does that mean? That means we want to be positioning ourselves short. And so intraday, we're going to get some buying opportunities, of course, maybe even positions that we can hold for like some days or even weeks. But longer term, you can see that we're reacting at supply, so we want to be positioning ourselves short. And so price is reacting to this, so you want to be selling pullbacks to areas of supply, which we can see very clearly on the weekly and on the daily. So we have the parent, we have a couple of children down here, we have one here and one here. This is the clearest price imbalance that's closest to price. So I'm thinking if price manages to come back up here, then you can sell, which is again is in line with this here. This is also a very nice area just up here, the 8750 area. Yeah, and so that's a really important question to ask. So if we grab just a random pair, let's say the Kiwi, that's a nice pair, and if you're on the hourly chart, you think, should I be buying or selling? Well, I should be buying because it looks like that price is going higher, right? If you go to the monthly chart, it'll do it for me. Yes, you can see that we are reacting at supply. I wish we'd update supply. So we tested this supply, which is this is a really nice one. The price tested it, and then it went south, and we reacted to this area just down here. So price reacted to that once. Looks like price had another test. This is probably a reaction to this child, like micro child in here. And now price is starting to give us a bit of a reaction. But for the time being, we're reacting on this like pretty poor area of demand, but it seems to be a holding price for the time being. But if you look a little bit lower, you can see that we have this area here of demand, which is down there, which has been tested. And then you can see that we have demand below price. So we have this area of demand is still untainted. We have this one that's still untainted, but we have this weekly supply at the top here. Is that weekly? Monthly supply at the top here. Let me see if I can get it to... Okay. So we are kind of trading between this demand and this supply, which means that we are moving sideways. It's a bit not very clear looking at this on the monthly time frame. But if we go to the weekly and have a look, we might be able to see a little bit clearer. And you can say, okay, we have this demand and we have this supply. So this is where trend lines come in, and they're quite helpful for us. So we have this swing high, this swing high. We connect the two. And you can see here that when price left this area of, this reaction to monthly supply demand, it moved through the trend line and broke the trend line. And that qualifies this as demand. So we can mark it off like this, like that. So this is where we're getting the reaction. So price is currently reacting to weekly demand. And so for the time being, you want to be buying. We were in a downtrend on the weekly chart until price broke this this trend line. So now we are in a bearish consolidation. We have a downward bias, but until we can connect some tops using valid swing points, we are just taking a breather from a downtrend. So we expect price to continue moving lower. This is higher probability than price to start moving higher, from what we can see here on price. Sorry, the sun is blazing through the window and I can barely see anything. So that's what we can see here. If we go to the daily chart, you can see that we have these highs. They've been connected. Price cut through them. We had this swing high, which is a pretty nice price imbalance. Price tested. It didn't really do anything. Then you can see that price managed to cut through it. So we move the area of supply to the area of demand that took out this supply, which is this one here. You can see the accumulation candle. Go from here, move to here. Price tested, we had a rejection, another test, and then price went higher, and then price tested it once, twice, and then it finally cut through it. But this is no longer valid. Why? Because this area of supply consumed this. So you move this up to that area of supply, which is somewhere around here. We'll go like that. Now we'll take the whole thing. Something like that. So this area of supply is the one that took this one out. And so we want to be shorting entries between the 71.77 and the 72.45. What I don't like is when price is pretty efficient, and we had accumulation, imbalance, balance, imbalance, and then balance. But I think that this is looking okay for the time being. So on the daily chart, it looks like that. If you go to the 4-hour and we have a quick look, you can actually refine the entry and you can put it there, and that's a little bit prettier, I think, like that. So this is where we have the proper pattern that we like to see, the 72.02, which is also the big figure. And if you want to look at those big figure levels, and you can tell the indicator to do it, enable round number levels. Yes, please. You enable that, and then it'll draw it off for you like that, and it just marks it off just here, as you can see. So that lines up nicely with the bottom of that area of supply, which is where the real price imbalance happened. So I think if price comes up here, we'll probably see some kind of reaction. Not that I'm doing an analysis on this chart. This is just to show you that doing a top-down analysis is a really good way to help you identify what is currently driving price. Okay, cool. I think I'll leave it at that. Unless anyone else has any questions. Is there anything at all? I don't want these to take more than 1 hour. And we're right at an hour. Okay, cool. Good. Well, if there are no comments, then I think I'll wrap it up. But I'm glad that I'm able to do these sessions live again. It's really good. Oh, nice, Ranjit. Ranjit is saying that he finds them very interesting. I'm very pleased. That's brilliant. Good stuff. Thanks so much, Warwick. But I'm really pleased that I'm back. I'll be able to do these. There'll be at 1 o'clock Central Eastern Standard Time. I hope that's okay for everyone. I hope you're all right with that, Warwick. What time is it with you now? It must be maybe 11-ish at night for you. We're getting pretty close. So I know it's pushing pretty late. It's 10 o'clock. Okay, that's all right. That's all right. Excellent. Cool. Okay. Well, I'll wrap it up. I wish you all a pleasant night's sleep, Warwick and Takuji, and everyone else. Have a super week. And again, if you have any questions about the software or trades you're looking at, please send them in, and I'll gladly get back to you. Until next week, have a lovely week. Thanks for watching.